Looks like a freeze is incoming.
I guess the gopher was right.
Hey there, folks. Gorilla is back. Don't trade what you can't afford to lose. And I'm about to show you why. But first, like and subscribe. Or unlike and unsubscribe. I guess we could use all of it. Yeah, so this is an update. I'm importing my trades from the 18th and the today in on my TradePiks Trade Journal here. So I haven't provided any recaps or done any updates. Been a little bit busy, but have not stopped trading. I've been closet trading and just too busy to create the updates. And once you see the calendar and you see all the updates, you'll see why. And yeah, not a great look for February. I thought that I had started out that I was going to start out bullish in 2026, but that is not the case. There's a whole bunch of issues that are plaguing, and I need to work on those and see if it's worth it. I've sort of hit a threshold. Started trading with a 2K account, but I was not expecting to lose all the money I've lost so far in 2026. And as you see me here going through some of the trades, did have a couple of good days, and but more bad days than good days. And the good days were very low on the winnings there. And so, yeah, not very good. Profit per share is, at the bottom. Here's a particular trade, neutral, but everything's panic, everything's FOMO. And I need to fix that. And I think part of the problem is that I'm a very chill person. And so I sit back watching the market, and I don't react quickly enough. I just don't have those reactions to quickly get out. But I also hold shit stuff way too long. But anyway, so enough about me. So the market, we've been here before. The market has been low. I mean, the economy has been bad. I was looking up the other day when I remember April 2020 was when oil hit negative pricing. Can you imagine that? It was like at $2 for a while, and then it went under, and Russia and China couldn't rent enough tankers to fill their bill, so that they could stack oil, and it eventually picked up. A couple of months later, and went up to 60, and then eventually up to 115. So we've been there before. .com bubble back in the 2000s, early 2000s, and we've lost money. So I think that for most of us that are working on 2K accounts, it's or small accounts. There's potential to make a little bit of money there, but it's not going to be money that it's any worthwhile making. And if you're paying for a broker, over 160 or 200 bucks a month, then making $12, $15 or even $6 a day is not going to matter. So don't waste your time. I think that the best course of action is to stop trading. There's a reason why Buffett told everybody why he pulled his money out of the stock market and went cash. And I think that a lot of big players followed. And what we're left here is just the lottery hoping folks like you and me who are thinking that we're going to be able to do something. I've never quit in my life, so I'm not quitting. Just get that through your heads. If anything, I'm going to come back a little bit more enthusiastic. But I think the 2K account is really, under the current circumstances, is not worthwhile. The economy is just not there. And I'm going to go sort of into a small editorial here. So this Friday, the 20th, the market should have crashed, should have dropped 50, 60 points. The SPY should have. Our GDP went down to 1.4, and people are writing it off saying, you know what, it was the importers. They were anticipating tariffs. They bought a lot of stuff in December 2025, and that's what brought the GDP down. Okay. The news that the Supreme Court called the IEEPA tariffs invalid sort of, I think, sparked a little bit of a leveling off so that the market did not sink. But here we are today, Monday the 23rd, 2026, and things are still not looking good. So, so this is an editorial and just an opinion. Think about this, why our economy is so bad, why the market's so bad. We were growing. We could have potentially stayed on the growth, but the dynamics of politics and policy have changed in such a way that they're going to make us suffer. And to be truthful with you, I think we might be looking at 4 or 5 years for a recovery from this. And the economy is strong. We're going to continue to turn over and buy what we need and certainly produce good numbers or pseudo good numbers, but nothing the likes of what we've seen before. The market will start to grow again, and we do have long-term investments. We're not pulling them out. You know, NVIDIA, VOO, we're going to hold on to them because we're looking 5, 10, 15 years down the road when stock is going to pick up, and that'll still be there. I'm not telling you should do that, but you know, the same thing with crypto. We at least, you know, we bought in very low. I think Bitcoin below 60 and XRP was at 70 cents or something like that. So we're going to hold on to that and let it go. XRP may not have any support down. It might hit 80 cents if things get really bad. So be careful and try to buy bargains as of now. We'll have to wait and see until we see a period of 2 to 3 weeks where things are good. We saw a couple of weeks ago how the Asian market or Asian stocks in the American market were starting to pick up. And so there's different patterns here that we have to look out for. But anyway, to the base of the economy, one of the things, when you shrink the number of people, you also shrink the number of people that buy goods, that spend money, that help produce more goods, that help bring more goods in, that help to produce more money for companies to pay more and sell more and spend in advertising, spend in people, and be a little bit more fluid in using money to grow their business. We don't have that, and we may not have that for a while. You think back to the Middle Ages when kings reigned, they knew it. So they knew they needed more peasants. So they would go out there and get more peasants in order to be able to grow their kingdom. The Roman Empire is another perfect example. The Romans were basking in riches and spending money like there was no tomorrow, partying, because they were able to conquer other areas where they could, obviously, and enslave other folks, but be able to create trade routes that would push goods out to be sold, and not necessarily just Roman goods. I mean, goods from one end to the other. So the fact that we are anti-trade, and it just does not help. I'll give you an example. Say you have your own business and you sell widgets for $1, and the population of your region is 100 million people, and you want to get a loan, use some advertising money, and gain more clients, right? So you can probably kick out about 66% of those 100 million people, because there'll be young kids, old adults, and other people who may use a competing product. All right, so that leaves about 33 million people. And you could probably get a loan and spend $100,000 to be able to get maybe 2% of those 33 million people. And 2% is high, extremely high. More realistic is 1.2%. But even 1% would give you a huge leg up solely because of the number, right? Of people. 2% out of 33 million would be what, 6 million people. Even if you get half of that, you'd be growing very nicely. Now, shrink that number of people down to 10 million. It's a whole different story. Now you shrink that market of 10 million by 66%, and you're left with, well, a little over 3 million people. And if you only expect to get 2% of that, it's 600,000 people. And no bank or no one is going to give you a loan for $100,000 to spend to try to go get 666,000 people. Oops, the devilish number. Over 600K in people in new clients. What you need is a population that is bigger than your current region so that you're able to sell those goods there. Any transition to manufacturing, local manufacturing, is going to take a lot of years. And if the only things we sell is chips, then that's also going to be a problem. The U.S. historically has had great manufacturing. I can't recall all of them, but I certainly remember cars, right? Tools, bulldozers, even IBM computers. It was interesting. I remember seeing the container loads full of broken down IBM computers being shipped overseas so that they could pull the copper and the gold out of them. So there's lots of opportunity here, but we need numbers. We need the number of people in our local and in our extended markets. We need numbers who will buy more, who will spend more money, who will allow the company owners and the companies to project and spend on ad revenue so that they can try to grow their business so that we can move forward. What it is right now is shrinkage. So that shrinkage is affecting the stock market. Nobody's expecting companies to grow. And perfect example is Intel. I remember back right after the 2000, the dot-coms, I bought some stock in Microsoft and Intel. And Intel was, I think, below 20. Microsoft was below 28. I sold them off because I had them with E-Trade, a shitty broker. And Intel, for decades, hung around the $20 or under $30, never went anywhere. One of the greatest chip manufacturing companies, okay? And they were at $20 while Apple was about to go broke if they didn't get a loan. And look at what Apple stands now, and look at what Intel is doing. They should be, almost even, but they're pure mismanagement, poor research, poor R&D just did not help produce better growth for that company. So you can't have chip companies that are not going to grow and that are going to be mismanaged and expect them to bring back stuff. NVIDIA is a perfect example of something positive. So that's what I think of the economy. So I think it's a matter of putting on the brakes. I will still, if I can, get on and trade a little. And if I do anything in the way of recaps, will be a weekly recap. I don't believe doing any lives is going to help anyone. It's not going to help me. There's certainly a whole lot of other folks out there live streaming their market trades every morning. And, kudos to them. Go watch them. And they're willing to trade and risk money. Why not, right? But for me, I think this is a pause. I've learned quite a bit, and I think that I can employ and use that, but in a better market. And if it does take a year or two for that bullish market to return, then I'll wait and and take an opportunity there. I'll still be around. Coincidentally, I got a lot of gaming to do. I think Age of Empires released a new expansion or new tribes, so I got to take a look at that this week. World of Warcraft Midnight Edition comes out, so I'll be playing that. So I'll be too busy to trade on the stock market. And then, yeah, I should be spending the money I'm losing. I should be spending it on brand new monitors, curved monitors. Yeah, like the new ones from Dell, the 52-inch, the 6K one, and so I'll be playing WoW. And I've also what you've been seeing in the background is the TradePiks Trade Journal. So I've been working on that. This is where it stands now. And I've got it down pretty good. I just have to create a lot of import routines for the different brokers. So I've only got Thinkorswim working right now. So I'll probably be doing that over the next couple. Must have hit the wrong button. Sorry for that glitch. But this is my TradePiks Trade Journal. I'll be building a subscription model for it and putting it out there. And I'm hoping that to anyone who wants to test it once it goes on in beta, I'll be more than willing to give them a free subscription so that they can try it out. And if you guys are interested in it, leave likes down below. And then once it's ready and up on the server, I'll go ahead and advertise it, and then just have you guys go there and log in, get a subscription, a trial subscription, and then I'll switch it so that it becomes a permanent subscription for you guys if you like it, and also so you can offer your input to see what's working. So in the beta, we'll be testing it with no charge, and it'll just be a trial to make sure that the imports and everything is to your liking. I've tried to formulate it in a way that this is more specific to momentum traders, and it gives you the quick information that you need. It is also very mobile responsive and friendly. So whether you're using it on a tablet or on a mobile phone, you will get the full use of the application, and you'll be able to see it, all the charts and the data and the information. You'll be able to navigate the same way as I just did here on the desktop. And I hope to do that and get it out soon. And I'll have a full demo of it across all three, mobile, tablet, and desktop, so everyone can see it and put it on the website on TradePiks.com. Yeah, but that is where we stand, folks. The gorilla is I guess, the gopher is taken off, and told us it's winter, and the gorilla is spending its time cozying up with warm jackets. Yeah, my room gets very cold, and I hate to come in here early in the morning. It just affects me quite a bit. We're not that far from the mountains. Well, I think we are far. We're about 2.5, 3 miles from the foot of the mountain, but we get a little bit of snow up there at the very top, 6,000 feet, and my room gets freaking cold, and I can't have heaters. They shut my throat. They close my throat up. So I avoid heaters like the plague. So anyway, so that's the gorilla updates. Hope you enjoyed the video. Like I said, like and subscribe. I can always use them. I'll try to create smaller videos and update videos every week, and keep the content going up until we're able to pick up and do a little bit more bullish trading. So thank you to all who watch on a regular basis. Thank you all who check in. Thank you for all your comments, and I appreciate it very much. And hopefully we'll get something going soon here on the Trade Journal, and doing something else, do a shift, because trading ain't working. So we got to turn ourselves into business people. All right, y'all. Gorilla out.